Hello traders, Nalakshi Swami here. How you could have traded in nifty yesterday, and many people miss this sell-off. How one could be aware of this sell-off, I'm going to discuss. Actually, nifty previous day it was a gap down. It was the break of this structure. Break of this structure, and it continued down and it ended up here. And today, yesterday, it gapped up to the level of this level. Gapped up to the, you can see the level 16,038.85 and little bit of short of 16,037. So equal highs have been created. Usually, say this is nothing but is a range. This was the range. The price went up to this here, gapped up, went up to this and started selling off. Many people went short thinking that it will go down. But the reason is, if you see in terms of today's trade, it was the break of this structure, equal highs. Break of this structure, and it came down to hit this level. This is the flip level, equilibrium level. Equilibrium level, and it started moving up. While opening itself, it gapped up and created a equal high. So when equal high is created, these big institutions deliberately will do this. This is the range from 16,037 to 15,746. So when equal high is created, so it came down and it engaged the buyers. And if you see the movement of this movement, it was in a three-wave fashion. I'll explain it to you in detail how it is. Everybody thought it will go and fill this gap. It could not fill the gap. There were many people were long. It didn't fill the gap. The reason for that also I'm going to explain it to you. See, after creating an equal high, it came down and retested this breakout of this structure, BOS, and then it started moving up. So this was the equal high. So when they create the equal high, stop loss hunting will be there. I'll remove all these labels, price label, so that you can see it very clearly. And if you see, this was the gap created. In this gap, this portion has been, actually, there is a trade actually. In this portion also, there are, so buyers and sellers are there, and this is the equilibrium zone. This is the flip zone where price came down and they manipulated and it went up and it had a gap down. So this was the possible resistance I marked on the level. So I was waiting for this level because almost all the gap, in this gap, there are trades are there. In this total, in this gap, There is a trade up to this, and also there is a trade. Only this portion was left vacant. This portion, there were no trades in this zone. So going to this zone, you can see how the price has moved. Price has moved in, not in a straight or a trend fashion. There is no momentum actually. This break of the structure was in a three-wave fashion. And then it failed to, here you can see, it failed to, if it were to go past this level, if it is a trend break of structure, it started stalling over here, it came down and it started moving down. This was the first symptom. This was the first symptom that price is not going to go past this level. There is a change of behavior in this. So if you would have wise, you could have taken, you could have marked. I had marked, these are the marks. These are the levels, exactly these are the levels I had marked. And I was able to see the change in price action. And I was able to take the 16,000 put. So that's how you should have traded. Then there was an immediate fall. See how the fall is. This is an momentum fall. Momentum fall engulfing this area, and then after coming to this area, liquidity, they induce the liquidity and by engaged buyers and sellers, and they trap the buyers because this was the visible level actually, visible level filling the gap. And then it broke down and ended up here. So while coming, they have created equal lows over. When they created equal lows, there is lot of liquidity beneath this. So you can mark, go to the daily level, and you can mark the probable levels for the tomorrow's, Monday trade. This is one level. 1 minute. This is one level, and then another level is this one. So 15,679 and also 15,713 are the two levels you can mark. Let me go to the lower time frame. What they can do is they can grab the liquidity here in this level, they may start reversing. So if they start reversing, this is the equilibrium level, red color, I'll put it. So equilibrium level is at 15,890. So from here, if the move is down like this, it can go up to this level and it can start coming down, or it can retest this level and go past this level because there is a fair value gap over here. So I have labeled in the Nifty index all the things in the index and the price process. I'll tell you how in live market you could have made the price is not going to move past this level, and the change in the price behavior. Change in the price behavior. Can you see after leave aside the previous day high, after it making an high, it came down and it made a equal high here. equal. After this, it was the break of this structure. Break of this BOS. See, after the break of the structure, see, immediately you are seeing equal highs. After the break of the structure, price should have moved in a, there is no momentum actually. So it started coming back and it made a double top, and it retraced, I mean, it came down. It fell with the big red candles trapping all these buyers. This equal high has been created just to grab the liquidity over here. Because all the people would have seen this double top. See, you can see the double top rejection and its correction in the form of big candles. So they might have kept the stop loss and price started moving up and it showed the break of the structure. This is nothing but stop loss hunting. And also my level of 16,095. I had already marked these level. This is an equal low. This is equal. Equal low, they grabbed they pushed down and they had gone up and it was a gap down. And if you see in this gap, this much price, I mean, there was buyers and sellers were equal. There was a balance in the price action. Here, in this area also, sorry, balance in the price action. So this was the area which was vacant. So it came up to, this was the break of the structure and stop loss hunting took place. And after stop loss hunting, so they immediately mitigated this. Mitigated this means they offloaded. They came up and trapped again the buyers. When they trapped again the buyers, then they offloaded shares and they were in profit and they started coming down. And this was the flip zone. When it started coming below this zone, it was a clear weakness. One could have gone short around this level. And if you are able to read the price action like me, you could have taken short around this level, around 16,068. Failure of this and a big bearish candle. This is an order block. This bullish candle was blocked by the sellers and the retest was not, price could not go past this level, this sellers. This was a clear indication you could have gone for the put option. And finally, they grabbed all the liquidity. These are the liquid counters. These are the liquid counters. These are the liquid counters. Finally, they came down past this one and they filled this gap. See, they filled this gap and the price reacted. And then it started moving down. End of the day, it closed around 15,760. So now tomorrow, what could be the levels? These are the flip balanced level is very important for you. 15,874 and there are equal. This is an equal high. Balance flip level is an 878. They can go past this level for stop loss hunting. Stop loss hunting and then they may come back. Or otherwise, the trade may start going down. If it goes down below this level, it can go past 16,709 and 16,673 are the two levels or the two important levels because it is the liquidity counter. You can look for that. So only in the live market, because we cannot assess how the play will be. They can play in any way. They can push the price down because you can see the imbalance. See, this is the first imbalance and this is the last in 3 candles and 3 big candles, and the momentum is lost in this. If you see this fall, this was a huge momentum, and momentum is fading over here. If it comes down, if the momentum comes down to this level, if it fades, let me measure how much level, how much measurement is there. 1 minute, just a second. This is 123 points. Suppose if I measure this, that comes to around 16,671. That is the 120 points down move. Suppose if it starts making a lesser this one, around 15,709 or so, around this area, if this stops, it may turn around and it can come back to this level to grab the liquidity. So that may be the play. So from here to 700 to 200 points, you can anticipate move in that. So pull back to the, so play can be anywhere. So that's how you need to guess, and you need to start making the levels. You need to mark the levels. This is the balance. So you should anticipate these are the important levels for tomorrow. And this is the probable support level for the Nifty. So only opening in the market and how it proceeds, you can guess. But before that, you should mark the levels and you should be prepared for that. Once it opens and once it does move, in the first 5 to 10 minutes, you will come to 15 minutes, you will come to know what will be the move in the further in the move of the Nifty. So there are fair value gaps over here and there is a fair value gap here. Suppose if it comes here and if it grabs the liquidity, then it can move up to this level also, 15,999 to 16,000 also. Okay, friends, I hope you can understand how to take the trade, how to guess the price action, and you can trade wisely, how to mark the levels in advance, how to know the levels, and how to know where are the liquidity counters are there. These are the liquidity counters. Liquidity counters means the counters where buyers and sellers have been engaged. The imbalance area is where there is no balance between the buyers and sellers. This is an imbalance area. Fair value gap is an imbalance area, and this is an imbalance area. It becomes very easy for the price to move past this area because there are no hurdles over there. There are no hurdles over it. Then it can move past this area to test this level. I hope you will understand this price action. When the market opens, probably one day it is a holiday for the stock market, Indian stock market. We will come to know the price action by seeing the Dow will act, US market will act as a guidance for us. And the opening of the market and the levels will tell you how to trade. Okay, friends. Thank you very much. Nalinakshi Swami signing off.